Hey traders, Raghee here. Happy Monday, everybody. Welcome to Charts and Coffee for July 26th. Good to see everybody. Hope you had a great weekend and you're well rested for the week that's coming up. We've got a lot on the economic calendar this week, and really there's nothing else to even talk about. Forget consumer confidence. Just forget it all. It just boils down to Wednesday at 2 p.m. and then 2:30 p.m. Eastern while we hear from Jerome Powell. We get the statement, are there any shifts to a more hawkish statement? Maybe it's equally as accommodative as the one that preceded it. What is that press conference going to be like? What is going to be the tone of that press conference? And then, interestingly enough, that precedes relatively speaking, a more minor macroeconomic event, but of course, important is that GDP. Look, the macro influence on the markets, of course, is going to be the messaging of Jerome Powell, Powell, and we'll see how that goes. So the bigger question is, having punched higher to all-time highs, again, in the NASDAQ and in the S&P specifically, what kind of mood is the market in Monday, within this 48-hour window or just about within this 48-hour window to the FOMC? Are they willing to punch up to higher highs? Is the market just going to find just a little bit of a balance and just sit and wait? Are we going to have a buy the rumor, sell the news, where today and tomorrow we might rally, and then as soon as Powell opens his mouth for the press conference, the market sells off? That's oftentimes been before June what the typical rhythm of a pre-Powell event was like, whether it was FOMC or whether it was a speech. That was the rhythm. But now with the not hawkish, but that less accommodative tone, it's going to be a little different, right? It's going to be a little bit different. So having said all that, let us jump into the questions. And first up, Peter asks, what are earnings plays for the week in caps? All right, I don't care. This week, I really don't. I don't mean that to be dismissive of earnings. I just mean that the best earnings plays are not the binary scratch-off lottery ticket type psychology of will it or will not beat, will it or will not make the expected range. I don't want to play that game. Clearly, there's a huge win if you're right, yes? But if you're wrong, it's a very binary event. I don't like playing that kind of event. There's no gray there. You won or you didn't. So I typically like to avoid that. Now, having said that, you bring up a really good point. What are the earnings plays for this week? The earnings plays for this week are really what's coming up 6 weeks, 4 weeks, at least greater than 2 weeks from now. And if you've never, and I've laid out exactly how I like to play earnings. So for those of you saying, Rog, I don't understand. You're not playing the earnings of this week? Nope. Don't play that hardly ever. But if you check out countdowntrader.com and head out to, I want to say it's the 7th or 8th page. I mean, clearly we've got new updates every week, so it does push it back. But if you go back out to 7th or 8th page, you will find the 642 earnings. I know I'm just scrolling back. You will find the 642 in one of the updates we did. There it is, back in April. So we post this back in April. This is my 642 window to earnings. In other words, to me, the ripest environment to take advantage of earnings, to your point, is not what's this week, but what's coming up. If I look at this date, the week of the 26th, and I think at least minimally out 2 weeks, ideally around 4 to 6 weeks out, what's trending about a month or so before earnings. Those are where the higher probability, lower IV impact. Now, of course, this also means that I like playing directional debit trades. So if you love playing the credit side of earnings, ignore everything I said. And that's cool because, I think it's really important to say, explain what it is I'm trying to take advantage of equally as what it's not ideally designed to do. And I don't want to play the credit game as a general rule. Now, if you do, this is the week, clearly, right? So thanks for the question. Good morning, good morning, good morning. Let's see. Precious metals. Sure. Would love my perspective on precious metals, gold, silver, and platinum. So for the next few weeks to days. So the next few weeks to days. So William, thank you for the, R, thank you for the question. And then William, I'll get to yours right after. So R, thank you for the question. Now, I don't, I hope you guys understand the sort of delusion that any of us would have to say, well, this is what the market's going to do for the next few days or few weeks. No clue. I'll follow the path of least resistance. I will also adhere to the historical volatility ranges. In other words, what's the direction that the market has been going in, and what are the leaps in price movement that it's capable of making? That's the only thing we can do. Everything after that, we're sort of deluding ourselves. So I try not to do that on a regular basis. So gold and silver right now, really, I don't believe are kind of on the same planet. They're starting to change, in relation to each other, their behavior. I am bullish gold and I am long gold. So that probably says more than any of my analysis could say. Where do I have skin in the game? I am long gold. Silver is starting to look interesting. If it can track with strong gold and strong copper, then silver becomes easier to play because silver is a little bit like both. We've just completed a 1, 2, 3 continuation on copper. I think, James, you had asked me about this, if I recall, last week. So in terms of copper and gold, the clearer I have a trajectory of where they're heading, the easier it's going to be to play silver, because silver sort of acts a little bit like copper, and it's somewhat real yield sensitive like gold. And so I'm bullish gold, I'm long gold, and that's probably the most important aspect of anything I'm about to say about gold. And then platinum, I don't have a position in. I don't have a position in platinum. Now, platinum and palladium for some time have been really good, interesting contracts to play, but that was before we started to see certain metals that are more sensitive to reflation, copper, platinum, they unwound. They broke down their uptrend about 2 weeks before that June 16 FOMC meeting. So I'm leaving platinum alone right now. Platinum's a no. Gold, I'm in. Silver's probably going to go along for the ride as long as I see copper and gold remain pretty strong. So thanks for the question. R. So William asked, after a breach, if the pullback goes to the green VWAP line, then this is an AGRO trade. So initial balance, William. So remember, there's two kinds of breaches every morning. Both are based on a time slot, right? 9:30 to 10 is the clearing range. 9:30 to 10:30 is the initial balance. So initial balance to VWAP is something I will look for. That's really that sort of fifth pitch. I don't use it a lot, but that's that fifth pitch. Is it AGRO? I wouldn't categorically consider it AGRO. I wouldn't just call it AGRO. What I would say is you've got 3 VWAPs. You've got the 3 anchored VWAPs. So anywhere inside that cluster of VWAPs is valid, but you could consider the initial highest VWAP to be AGRO, sure. But the setup itself is not really considered AGRO for me. I just don't take it that often. One, because occasionally that pullback has a habit of happening after 11:30 a.m. That's really not my thing. I like to end my day trading at 11:30 a.m. And then the other reason is that unless certain criteria have happened before that initial balance breach, I find that it can be a little lower probability. And so I just assume be a little bit more conservative about that setup. Okay. So thank you for the question. All right, moving on to good morning. Hey there, Dan. Do I include dividends on my chart setting? Yeah, Dan. So you will see on my trading view charts, they'll put the economic events of dividends and the ex-dividend date, as well as the earnings date. The reason I like to know the ex-dividend date is number one, if you end up long just in front of the ex-dividend date, you always want to brace yourself for a potential pullback post that date. And then if you're waiting for a pullback and you have proximity to the dividend date and you don't want to be buying at a higher high, because don't do that, right? That ex-dividend date could give you the pullback that you're looking for. So that's what I would say. It's helpful from that time perspective of what psychology could tell us about market behavior before and after. So I do like to include it. Sure, absolutely. And you'll see it on my trading view charts. Yes. All right, let's see. You dig the Snoopy music? I think a couple of my intros, a lot of people have said Snoopy. I love Snoopy, so I'll take it. I'll take it. Okay, so yeah, does it sound like Schroeder? Does it sound like Schroeder at the piano? It might. It might. Okay, next up is, all right. Next up, where is my next question? Yeah, Kapowell, exactly. You guys are ready. I love it. I love it. So what about, let's see, which day of the week would be a caution day this week? Antonio, Wednesday. Wednesday for sure. Now Thursday too, because it's a GDP release, but let's face it, Wednesday is what this week is really reduced to in many ways. As far as copper making its move, kind of going back to that question before on metals, copper did make its move. That is true. I would need a pullback to get long copper. 1, 2, 3 formations are inherently momentum breakouts, which I don't love, but it's good to know that the pattern is usually the precursor to just a restructuring, hopefully into a trend. And I would say it's a little too soon to say Freeport McMoran is ready because the 1, 2, 3 in copper happened. Freeport McMoran, yeah, it's not quite ready for prime time. Yeah, leave that fruit on the tree a little bit longer. So thanks for the question. Battlehawk asked, I wanted to ask you about my volume flags. What am I really looking for on the flags? So we have historical volatility understanding. What is today's volatility versus, the historical 6-month? Same idea, right? When we say something is high or low, it's always a relative assessment. High or low compared to what, right? High and low, tall and short, narrow and wide, all that stuff is relative to something else we all have in mind. Unfortunately, a lot of times what we're measuring narrow, wide, tall, short, high, low against is completely subjective. There's no methodology, there's no process behind it. So the volume, and you can see them on the upper corner of this chart. I know the font is tiny, but when I'm looking at that volume, what I'll understand is what's happened the previous 21 bars. What's today's volume versus a daily average? What's the current bar? So I've just got a better idea of understanding where I am within the framework of a lot of volume versus a little volume. The framework of, is this higher than normal? Is it lower than normal? So that's all that it is. It's just to understand where you are within that, what can be sadly a very subjective measurement of the market. Oh, that's a big candle. Big compared to what? Yesterday? Big compared to the last month? Big compared to the last 6 months? So I try to always start with some kind of measuring stick, agreed upon measuring stick, from which I'll say, all right, here's a relevant sample size, and then I'll measure today's behavior against that, right? So thanks for the question. All right. Big banks are not loaning, how does that affect our trades? If your time horizon is longer, bordering position to, if not investments, it's probably going to be pertinent. Does it matter for me on day trades? No, not even a little bit. Does it matter for me on a trade that has a time horizon of a few days? Probably not. That news might be the kind of subjective, sudden headline that gets a lot of play. Just like when we hear COVID numbers, just like when we hear some random soundbite from an FOMC, those are that little bit of news there, Joe's place. Those are the kind of things that kind of come out of nowhere, and they find themselves in sort of the cyclical loop of the news cycle. And even if it's something you might say, oh my gosh, I knew this, Monday. I was talking to Raghee about this on Monday in Charts and Coffee, and it pops up next Tuesday, and all of a sudden it affects the market. News isn't news until we know about it. So keep that in your pocket. It's good to know, and you might find that it'll make the rotation at some point. But it really won't affect what I'm doing, my friend. If a market's in an uptrend, it's focused on something else. And that's always something that's very difficult for news followers, and especially macro folks to play. Macro folks can fall in love with a narrative. They could care less about timing, usually. They think the markets are in their own delusion because a macro says this and market behavior is doing something else. And macro people usually get run over by price action, which definitely would eclipse macro trends. Macro trends are large events without really an element of timing. And then sort of these news bites or tidbits like that can kind of be the same way. So unless the market cares to pay attention to it, the reality is what is in front of our faces. And I know that may not sound logical, but that's the way the markets work. How many times have you heard a bit of news early in the morning, and then at 1 p.m., it's making the rounds in financial media, and all of a sudden the market's panicked or excited about it? You're thinking, my gosh, that news is hours, if not days, if not sometimes weeks old, but now it's being reacted to, because reaction requires knowledge of. So I hope that makes sense. Natural gas is probably the strongest corner of energies right now, Larry. So yeah, pullbacks, but it's off to the races. My biggest gripe is I'm running out of time on my long UNG calls, and I'm just going to run out of time. But we'll buy more pullbacks. It's the strongest corner when you think about crude oil, RBOB gas, heating oil, natty gas. Now, natty gas is not like the other three. The other three are rooted in what's happening in crude, RBOB, and heating oil. Natural gas is part of the energy conversation, but it's not as tethered in any way to crude as the other two are. So I like that one a lot. The trend is beautiful. Why long GC if it's turning red, yellow on the daily? So when I sent out the alert for GC to the members, I said, look, this is not a trending conversation. This is really more a play on real yields. This is a play on 1800. This is a play on a 1, 2, 3 that preceded long before this particular play. This might even be a continuation 1, 2, 3 that's happening now, that is going to require a break above 1835. So it's a different type of structure that I'm willing to play there, Stephen. It's not, the trend follows that I'll make non-trending markets a very, very minor part of what I do. But it's still going to be there. If I like a narrative and I can control risk, as we have been able to do in gold, if gold is not sitting prettier come Wednesday, I might just cut it. And if that's the case, it'll be either a very minor gain or a minor loss, and it'll just be a wash. But I don't mind to play non-trending. I just won't make it the main part of what I do. I won't make my book of trades full of non-trending markets like this. So I hope that makes sense. All right, gang, just like that, it is 9:20. It's time to head on over to your respective rooms. I'll see you all in the Sector Secrets room for probably the most part this morning. I'll be in the futures room for the close. So we'll talk about those names and symbols that are on my watch list for the week. We'll do some watch list discussion going into the close. So I'll see you all there at 3 p.m. in the futures room. And in the meanwhile, have a terrific day. And I will see you all tomorrow. Same time, same station. All right. Be good to each other.